Accountants sometimes have to use estimates in their accounting. For example, when depreciating the straight line method, we have to estimate the useful life and we have to estimate the residual value. Sometimes the estimates prove to be wrong, and that means that prior years' financial statements have bad estimates. Well, there's some good news. The accountants do not ever have to go back in time and fix things in the past. They just have to fix them from now on. Because if accountants had to go back and fix things that have changed, or assumptions that have changed, or estimates that have changed in the past, their work would never be done. And the readers of financial statements would not know if they're reading the most up-to-date income statement or balance sheet. So accountants would go insane if they thought they had to go back in time and always fix things in the past. And nobody would want to be an accountant. So changes in estimates only affect the future, not the past. For example, look at this slide. We have purchased some equipment for $100,000. You can see that we purchased it 3 years ago, and here's the journal and the ledger T accounts corresponding to this equipment. You can see that we have been depreciating this over 10 years, and we have an estimated zero residual value. Now let's say after 3 years, we've changed our opinion about this equipment. We think it's low quality and it's not going to last 10 years. We think it will probably last only 2 more years, after which time we'll be able to sell the equipment for a residual value of $5,000. So you can see in red, this is what we have to do in the next 2 years, 2 depreciation journal entries, and we have to calculate the amount. Now we have arrived at the whole purpose of this video. We need to calculate depreciation for the next 2 years. And there are 3 things we have to remember. We have to remember that we have already depreciated $30,000, and we can't depreciate that again. We have to change the formula for that $30,000. I'll show you how. And we have to change that zero, the old residual value, we have to change that to the new residual value of $5,000, and we have to change that 10 years. We initially thought we were going to use this equipment for 10 years. 3 years have passed. We think we're going to use it for 2 more years, so we have to change useful life to 2. And here's the answer. We have inserted 3 numbers to the formula. The number 5,000 and the number 2, those are very easy. It's that number 30,000 that students sometimes forget about.